Alright, hello everybody, welcome to another video. In this video, I'm going to go over the variation of the silver bullet that I want you guys to utilize. It is a very simple variation, and I'm going to break it down with a checklist of what to look for step by step to maximize your results every single day. So, let's go over this checklist right now. What is your job going into the session? Number 1, locate the likely draw on liquidity. What does that mean? Look for areas in the charts, whether it's on the 15-minute, the lower time frame, or the higher time frame, where price will likely gravitate towards. Are there several lows, several highs generated, liquidity that has been untouched that price will likely gravitate towards? Locate the likely draw on liquidity for price. That is step 1. So you can find the likely direction that you are going to operate out of. Number 2, mark out buy side liquidity levels and sell side liquidity levels and find a 15-minute sweep of liquidity for price to sweep one side of liquidity and then reverse in the direction of the draw. That is step 2. You have the draw. Now the 15-minute sweeps the opposing side before reversing in the direction of the draw. Number 3, dealing range. Use the dealing range, and I have a video going into what the dealing range is, to give yourself the optimal entry, to take longs in a discount and shorts in a premium relative to that range to find the optimal entry in the direction of the draw. So now you get that 50-minute sweep of liquidity. You find the optimal entry using that dealing range below, let's say, the midpoint for longs to several highs above. That is the likely draw on liquidity. Now, when you have that dealing range, you go for a lower time frame break of structure, and then 5 PD array entry. That's it. I'm breaking it down as simple as possible. If you want to swap out a break of structure for a change in the state, it adds confluence, but your entry might not be as optimal at all times. That's okay. You can look for a break of structure, find that entry, and there you have it. So utilize this. When that break of structure occurs after the reversal, you want to take your entry, and listen here, you want to take your entry back past the liquidity swept. So that 50-minute sweep of liquidity, let's say, here, I'll break it down for you. Let's say we do this in price. We come down, and I'll show you. We sweep liquidity here. Let's say we come down, and we sweep 15-minute sell side liquidity here. Your entry should not occur here. You want your entry to occur when we come back past the liquidity swept. Just like if we were to sweep buy side liquidity here, you want your entry to occur if we come back below that buy side liquidity we swept. So we swept sell side here. You want your entry optimally to be somewhere in this leg here. That's what you want to look for. And then we retrace, get the entry, and move up to that likely draw on liquidity. So that's what you want to do. So let's look at what we have here in this AM session. Price comes, we have clear buy side liquidity right here. Price comes, sweep. Buy side liquidity right here. And let's look here. Do we have draws for price to target? Well, look here. Several lows below. If we go to the 5-minute here, if you look, we have objectives to the downside that we could come take out. We could come do damage to. Look at these on the lower time frame. Look at all of this liquidity we could come take out. So yes, we do have objectives for price to gravitate towards. And one of those draws is equal lows right here. So we have equal lows here. And so yes, we do have clear draws for price. We have sell side right here that price can gravitate towards. So we do have draws for price. So that is steps 1 and 2 done. Dealing range. Where is the dealing range? Well, price did not sweep liquidity here on its rally up. So where is the last point that a low swept another low? Right here. This low swept this liquidity right here. This is your low of the dealing range. And this high obviously swept liquidity right here. So here is your dealing range. You have your dealing range set. The optimal entry will occur in this area right here. Above the midpoint, back past the buy side swept. Optimally. And you have clear objectives. So there's steps 1 to 3 done. Now let's go on the lower time frame and look to see what we have for price. We have this here, here, sweep right here. Here's our checklist. All right. And let's bring that right here, 211.75. All right, let's see, what does price do for us here? Do we get any optimal entry? So the optimal entry will occur in this half right here. Right here. So I'm going to remove that dealing range here just to not add any confusion. This is the premium of dealing range. Premium of dealing range. So the optimal entry will occur in here, because that is a premium relative to price. So we're going to put it in this color here. And so now we're on the lower time frame and we're looking to see if we get a confirmation in price. So let's look and see. What does price do now? All right, price comes. Internal sweep as well as the 50-minute sweep of buy side. Change in the state of delivery right here. Breaker formed, fair value gap formed. Now this is an entry you could take. But, like I said, the optimal entry would be if we come back below the buy side liquidity swept. So you can wait as well and find another entry that's worth taking. And here we have it. Enter off the bearish gap right here. Here we are. That's our entry right here. We come back below, break of structure, and here is our target. So there is the clean move. Stops above the high. Because if we have the direction right and the timing correct and everything is met, price should not come back to this high. And so this high should remain protected. And we should gravitate to look at these draws here for price. We should gravitate there for a 2.15 almost. 2.14 to 1R. So 2 to 1 we'll say. 2 to 1R. Following that checklist, steps 1 to 5 are all met. And so let's see how price delivers. It doesn't matter if the entry necessarily is disrespected. It matters what you're aiming at and if it makes sense. So there's TP1 at the equal lows there, and we still have sell side there. And so you could see what does price do to this point. And there we go. Price goes to that sell side liquidity, almost 230 points over a 2 to 1R using that checklist. This is the variation of the silver bullet that you can utilize time and time again. All right, so here's another example of the variation of the silver bullet that you can utilize. Very simplified, broken down. What do we see here in price now? Step 1 is finding the likely draw on liquidity. What do we have? Well, number 1, on the 15-minute time frame, we have equal highs here, clearly defined. Several highs here, as you can see, untouched. If you look, this high hasn't been swept. 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 And we have lows here that we can come and do damage to as well. So I'm going to mark out this sell side right here that we can come and do damage to. So right here, sell side right here. And so we have cases for both sides. And so we would wait for price to take out one side and then see if we could get an entry. And so if we go on the lower time frame, we wait and see what does price give us here. And okay, upon market open right here, sweep of this 50-minute sell side liquidity. What do you notice here on the lower time frame as well? Look at those highs. On the lower time frame, look at all of these highs, this generated liquidity here. There are several, countless objectives to the upside that we could come and take out. And so the drawn liquidity is clear on the 15-minute and on the lower time frame. So we have the direction. This is where price will likely gravitate towards. And so steps 1 and 2 are complete. What do we see price do? Form a gap right here, coming back past the sell side liquidity swept. What else do we do? Well, we change the state of delivery right here. State of delivery has changed. This is also a break of this swing high. So, okay, there is step. The next step complete. So when you use the dealing range here, this high here, as you can see, this high here swept this right here. So we have a sweep of liquidity right there. There's that all the way to this low that swept this low right here. So if you use that dealing range, what do we have? This entry is clearly in the discount of that dealing range. And so you would wait for the retest, stop below that low, clear objectives to the upside, clear direction. So there we can see we're in a discount of that dealing range with that change in the state. PD array entry right here, and you can target those equal highs right above for an over 2-to-1 R. And so let's see if we get that entry. And so there's the entry right there. And so let's see what price does. So as you can see, price keeps on going and goes all the way to these equal highs, to that drawn liquidity for 158 points almost, over a 2-to-1 R, retesting that fair value gap entry, using that simple checklist, finding the likely draw, the 15-minute sweep of liquidity. You saw the likely draw on the 15-minute equal highs, and on the lower time frame I showed you, look at all of those highs. So we had the draw for price on the lower time frame as well. Generated liquidity, low resistance for price to come do damage to. There's damage to be done to the upside, and you know that. And so once you see that, you get the 15-minute sweep, you get that reversal, price comes back above the sell side we swept in a discount of that dealing range, form that PD array, change in the state of delivery, retest of that fair value gap. That's your entry, targeting the opposing liquidity for an optimal trade following that variation of the silver bullet. And so this is how you can utilize it to your advantage day in and day out to find optimal trades. So I hope this was insightful. I want you to backtest this, study it, see it for yourself. Good luck and good trading, everyone. Take care.